Concern over the future of the economy has been voiced by several prominent figures, including the head of the World Trade Organization and Paul Krugman. More and more people are sounding the alarm about an impending global recession. Warnings of an impending global recession started as a low rumble at the beginning of this year, but they have since increased in volume significantly. Hey guys, welcome back to the channel and greetings. Today's video will discuss how the world is facing a global, so stay focused. During the last week, prominent personalities such as the head of the World Trade Organization and the American economist Paul Krugman, winner of the Nobel Prize in Economics, has sounded the alarm about the possibility of a worldwide recession. According to the findings of a survey that was conducted by the World Economic Forum in Switzerland and made public, 7 out of 10 respondents in a sample of 22 largest private and government sector economic experts said they suspected a global recession was at least kind of likely to occur in 2023. In the meantime, Ned Davis Research, a research company based in Florida that is well known for its global recession probabilistic model, increased the likelihood of a global recession occurring the following year to 98.1%, which is the highest it has been since the COVID-19 pandemic-related decline of 2020 and the worldwide financial crisis of 2008-2009. Shareholders are greatly worried about the possibility of the United States Federal Reserve increasing interest rates so vigorously that the nation's biggest economy tips into a downturn, taking a significant portion of the rest of the world with it. While the war in Ukraine, China's draconian global epidemic policies, and rampant inflation are all obscuring the financial prospects, investors are especially concerned about the possibility of the United States Federal Reserve increasing interest rates so forcefully that the uncontrolled inflation. Throughout history, the United States Federal Reserve and other central banks have had a difficult time successfully managing the task of raising interest rates, which increases the cost of borrowed money and investment for both companies and individuals. However, this has been accomplished without severely hindering economic growth. In the past, economic downturns have been attributed to the Federal Reserve's attempts to bring down rising inflation. One example of this is the back-to-back recessions that occurred in the early 1980s. A recession is typically defined as 2 consecutive quarters of negative growth. This time around, critics have accused the U.S. Federal Reserve of waiting too long to begin raising interest rates, and then resorting to significant rate hikes in recent months to make up for its past procrastination. Notable economists like Jeremy Siegel are among those who have made this accusation. The chairman of the Federal Reserve in the United States, Jerome Powell, admitted this past week that central bank officials don't know whether their attempts to rein in rising prices will lead to a downturn or how drastic a recession would be. Powell made this admission even though he is still holding out hope for a soft landing for the economic system. Jerome Powell, the chairman of the Federal Reserve in the United States, has acknowledged that the central bank cannot be certain that its attempts to rein in rising prices will lead to a crisis. According to Pao Lin Tian, an assistant professor of economics at the George Washington University, speaking to Al Jazeera, said that for the United States, if the economy doesn't display symptoms of cooling in the last few quarters of 2022 and initiatives of inflationary pressures begin to climb, this would force the Federal Reserve to proceed with forceful rate hikes further than 2022 into the spring of 2023. In his opinion, that's when the economic system will tip into a downturn. If inflation does not display signs of cooling in the last, he believes that a situation similar to this would also apply to other nations. If central banks are compelled to forcefully and continuously hike interest rates, either to protect their currency or to manage inflation, then a downturn is unavoidable, said one economist. The actions of the Federal Reserve could easily push the economy back into recession, according to Campbell R. Harvey, a scholar at the Fuqua Business School at Duke University. Harvey was an innovator in the use of returns on U.S. bond markets to predict downturns. He said that a recession would be very effective in lowering inflation. However, Harvey told Al Jazeera that recessions are extremely unpleasant experiences. According to him, no one wants to lose their job or be obliged to accept help from the government for an extended period. However, Harvey stated that the yield curve indicator that he has used to correctly forecast the occurrence of the last 8 recessions did point to an impending economic slump at this time, because the curve had not yet inverted for an entire quarter. When an inversion occurs, it is very terrible news and is linked with a downturn. Risks in Europe, Asia. Given the difficulties that currently exist, there is little reason to have confidence in the economy of the world. The Organization for Economic Cooperation and Development has released a report stating that it is forecast that 3 of Europe's largest economies, Germany, Italy, and the United Kingdom, will all go through prolonged recessions in the following year. The primary reason for this is the disruptions in energy supplies that have been brought about as a direct result of Russia's invasion of Ukraine. According to projections made by the Organization for Economic Cooperation and Development, the Eurozone's economy would only grow by 0.3% in 2023. This suggests that many of the bloc's members will be experiencing a recession at various times throughout the year. The Chinese government's zero-COVID lockdowns and border restrictions are becoming a significant obstacle to the region's potential for economic expansion. This is the case despite the fact that it is anticipated that the Asia-Pacific region will not undergo a deceleration in economic growth. The World Bank has reduced its economic projection for the Asia and the Pacific region from 5% in April to 3.25% as of currently. In addition, the World Bank reduced its forecast for economic growth in China to 2.8%, which is a fall of about 50% from its earlier prediction. Trinh Nguyen, a senior economist for emerging Asia at Natixis in Hong Kong, believes that the effects of higher interest rates will be felt throughout the economies of Asia. This is Mr. Nguyen's point of view, if you were wondering. According to Nguyen, the situation in the region is more appropriately described as a slowdown, not a meltdown, at the moment. We believe that the rate of expansion in Asia will slow down to a more manageable level in the near future. According to the statements that Nguyen made during an interview he gave to Al Jazeera, economies that are more susceptible to the negative effects of the trade cycle would be the ones who are hit the hardest by the effects of a decline in external demand. South Korea and Taiwan are 2 examples of economies that suit this definition and are both located in East Asia. A reduction in investment in rising Asian countries other than China is likely to occur as a direct consequence of the tightening of financial conditions. It is projected that consumption will decrease, but it will likely remain stable because the bulk of these products is a fundamental need in emerging Asia, except for China. Even while he had much greater confidence that Europe would spend 2023 in recession than the United States would, Harvey, a professor at Duke, indicated that the outlook for the world economy was uncertain, even though the global economy was facing an uncertain outlook. The rate of inflation is something that can be observed in any region of the world. According to him, economic downturns and periods of rising inflation seem to occur together quite frequently. It is almost inevitable that a global economic slowdown would be triggered if the United States were to enter a recession. That's all we have for you today. If you enjoyed this video, give it a thumbs up. If you don't want to miss any future videos, subscribe to the channel and switch on notifications. First and foremost, what do you think global recession, and do you think it's approaching? Please participate and share your thoughts in the comments section below. Thank you so much for watching.